Can
Hey,
you hear
how's it
me okay,
going?
Josh?
Can you hear me?
Yes, sir. Can you hear
Excellent.
me?
Yep.
I got my notes.
Hopefully it's not a full page. Maybe it's just like quarter of the top part of the page. That'd be nice.
Yeah, it's like maybe 2 inches, 3 inches of notes.
Okay.
Kind of like my attention span.
Yeah. The older I
Um,
get, the shorter mine gets.
what's that?
The older I get, the shorter mine gets.
Yes, well, mine's been pretty short for quite a bit. So how you doing today?
I'm doing good. How about yourself?
Fantastic. I'm gonna turn the volume up on my side a little bit, so I can hear you. Can you hear me okay?
I can hear you perfectly fine.
Wonderful. Um, if you guys can hear me, do me a favor, please put a 1 in the chat. And let's see here. We are going to get rid of this one. All right. Oh, I think I just booted her. Can you still? Okay, perfect. Um, okay, so we're gonna go ahead and get started. Um, and before we do, so Josh, you do like payment processing, alternative options to Stripe,
Correct.
um, right? Looks like the chat is disabled, but we can hear you. Okay, thank you, Jennifer. Hey, Welgie, are you on the call? Can you um, we're gonna get somebody to fix the chat for you guys so that you guys can chat in the room. Okay, so while we're waiting for them to fix that chat, thank you, Jennifer, for letting us know. Um, so you offer an alternative to Stripe, right? So did you start out with HighLevel and then start offering payments, or was it the other way around? Or
So yeah, it's a good question. I was doing contract CMO work for a payment company,
okay,
and their marketing was disparate at best. Like it was all over the map. ClickFunnels, WordPress, Wix, you name it, they had it. And so in an effort to just consolidate all of that and make the entire role of that contract CMO better, I stumbled upon HighLevel and got involved with the HighLevel Facebook community and kept working for that company for a little while. Great family business, great people. And as I was doing that, noticed the trend in HighLevel about payments, like about people complaining about Stripe. And so I was like, there's probably an opportunity here for us to see if we can't fill that gap. And long story short, they wanted to go in a different direction. And so I went my way, which was where we're at now.
okay,
They did mostly in-person sales, restaurants, convenience stores. That was kind of their vertical, if you will, their niche that they operated in. And this digital space wasn't in their wheelhouse.
yeah,
There's so many different verticals in payments that you want to really find somebody that's sort of specialized in high risk digital businesses, that kind of thing. And so basically that's what happened. We noticed the problem. My business partner and I put the money together and we built the product and started solving the problem.
that's
So
fantastic.
yeah.
Yeah. I've seen your platform. You showed it to me a while ago. It's quite robust. So in the HighLevel community, like one of the biggest things that people were talking about is everybody losing their Stripe account for no reason whatsoever, or not really understanding why they're losing it and getting disabled and so forth. Like it's become like one of the most popular topics. I see it in
Mhm.
there several times a day, every single day.
Yeah.
Um, and like what do you think's going on? Like why is this happening to HighLevel agencies?
So what's going on, quite honestly, is Stripe's just changing their policies. I mean, it's pretty black and white. The bigger question is why are they changing their policy? So I can only use my best educated guess on why they're doing it, knowing what I know about payments.
Mhm.
And what I know about payments is it's based on risk, right? You have low risk. Somebody sells you a Snickers bar for $1.50, right? In person with a debit card. It doesn't get lower risk than that, right?
Right.
Product was cheap. It was delivered to you instantaneously. You paid with basically cash with a debit card, right? And it goes all the way up from there to, hey, you're going to pay me $1,500 a month. It's going to take me a while to deliver that product every month, which means it's future delivery. You never saw the card. Sometimes you never saw the person. That goes to high risk, right? And then
Right.
the products themselves can get insanely high risk. And so Stripe, while a brilliant technology product, has what's called a sponsor bank on the backside that's just not interested in that risk anymore. The two brothers that started Stripe, I don't know them personally, so this is just stuff that I hear.
Okay.
The two brothers that started Stripe, obviously brilliant guys, sold off their majority shares and they're no longer the majority decision makers. It's to a board now. And that board has decided that they want to go public. And so when you go public, you start cleaning up a whole bunch of stuff. It's just what businesses do.
Yeah.
And so there's a lot of factors really going on there. The riskiness of any merchant account, where they want to be right in the landscape of payments. And so, if you take it and I say this to everybody, I'm not a fear monger in any way. Stripe is clearly a good product. There's a reason that they're successful, right? It's left clues. But if they're shifting how they're doing business and who they want to do business with, why wait for the hammer to drop, right? So you just have to think about where you want to be in that landscape. So when you think about HighLevel, Stripe did roughly $1 trillion in volume last year.
Wow.
Has been widely reported. I think HighLevel is in the $1 billion range, like just the volume that's going through it for all the businesses that are using HighLevel could be at 2 billion. It's like, just do the math. The percentage just isn't that high, right? So again, I'm not a fear monger, and I'm not saying they're just gonna, with a machete chop everybody off in HighLevel.
Right.
But the reality is if they've changed their policy and they're removing people that they deem to not be the partners that they want to have to process payments for, then cutting off everybody in HighLevel doesn't impact them revenue wise, right? So again, that's not what I'm saying is going to happen in any way, shape, or form. That's just not who I am. I'm just here to provide, don't risk going down that path, if that makes sense.
Right. So, so one of the things I thought was really interesting, I don't know if you know our story or not, but we used to own a chain of gyms and a clothing line. And when we started taking payments for our gyms, we went through like an underwriting process.
Yep.
Like literally, the bank was ask us questions about our finances, our credit, like how we delivered our product, when we delivered our product, how long it would take us to deliver our product.
Right.
Like whether it was tangible, intangible, whether we had the card in our hand, didn't have it in our hand, all of that kind of jazz and so forth. And then, it was just like an insurance thing where you're just waiting to find out if you get approved. And when we signed up for Stripe back in the day, we didn't go through any of that. I thought that was very interesting. So, I mean, can you kind of explain to the people that don't know, like, what's the difference between like being a fully underwritten, credit card processing account versus a non-underwritten processing account?
Yeah, so Stripe is Square and PayPal are exactly the same, by the way. So they're all called payment facilitators, payment aggregators.
Right.
They have their own underwritten account with their sponsor bank, and then they're able to subdivide that account just like you can do with an agency account in HighLevel. You can just create as many sub accounts as you want. And so what's happening is they're taking the risk for that account being opened, right? I say this all the time. They're the American Idol of payments. I want everybody to come on board. I want to make it as easy as possible.
Right.
And then I'm going to assess whether or not you're a good enough singer for me to take you all the way, right? And so because of that, they can do some due diligence through just technology on their end, right? Banks, even when you go through a fully underwritten side, as soon as you turn over bank account information to somebody, there's all these systems in the banking industry that they have that that other companies have access to look up to see who you are, right?
Okay.
So you are giving up enough information for them to make an initial assessment and go, it's fine with us. But you'll also notice when you sign up for somebody like Stripe, let's say you just go fresh today, sign up a new account. You can start taking payments today, but they're still not going to pay you out for 7 to 14 business days, right? Because they're doing some due diligence on the back end. They're making sure that risk is acceptable. Most of it is algorithmic. Most of it, right, is data driven on the backside. That's how they can onboard 20,000 new people a month. And so what's happening is they're literally renting you their merchant account. That's the difference, right? Whereas on the other side of what we do, we're underwriting you up front. They're underwriting you on the back end. We underwrite you up front, but we underwrite you based on you and your business and your bank accounts, not the industry, not necessarily just by the industry that you're in or those other things, right? So that's the biggest difference. If you were to, so I'll say this, if you were to start with us at the exact same moment in time as you did with Stripe, we would probably still pay you out faster for that initial payout. So it's just a matter of a perspective of what's going on and how it all works. So Stripe, super easy to set up, take payments today, right? But not get paid out for 7 to 14 days. Me, just get started with me. We'll get you through the underwriting process. We'll probably have you approved in 7 to 10 business days, sometimes sooner. In which case, as soon as you start taking payments, payouts 2 business days after that. So we're still in the same time frame. People just don't know that. It's just a lack of information, really.
Right. Okay. So is there a difference between like whether the card's present or not present as far as fees go, and like how that works when winning possible chargebacks later, things like that?
Yeah, I mean, that comes down to the strategy of what you're doing with your payments. So if you're in, so Stripe has what's called a flat rate pricing model. It starts at 2.9%. So I'm going to emphasize the word starts.
Okay.
I was just on a call with somebody yesterday. I mean, we do calls every day, every week, right? Multiple calls a day. And people are like, well, I'm only paying 2.9 with Stripe. And I'm like, you pull up your account. And so they'll pull up their account and they'll show me and I'll go, well, you're really paying 3.7%. And he goes, no, well, that was a bad month. Let me look back. He went back further and the math was 4.1%.
Wow.
So the further back we went, the worse that it got, right? So they're on a flat rate pricing model, but it starts at 2.9 and goes up from there, right? And never goes down from there. They still have to pay what's called interchange. This is the sexy part of payments, right? So anybody on listening to this, watching the replay, whatever in the future, if you can't sleep at night, look up an interchange table and read it and you'll go right to sleep, okay? Interchange always gets paid. So you asked a simple question about pricing. I'm just going to give some education, some information. Interchange always gets paid. The interchange is set by the sponsor banks. Visa and MasterCard are part of that whole process, right? And then that's the issuing bank sets interchange. And so what happens is how the fees are calculated are actually based on the card type that's used to pay. So in a flat rate pricing model, Stripe's banking on the fact that they're gonna get mostly cards that are under Amex Black cards, Visa business cards, right? The high rewards cards. Anything high rewards, 3% cash back, airline mile, all that stuff has a cost to it, right? And so they're banking on the fact that people coming in using their service will be lower risk, therefore lower cost, therefore better profit for Stripe, right? Okay. Which is why you've seen over the last several years, Stripe continually increase the cost of for anybody doing digital stuff. Now, if you're doing Stripe, that's one thing. So we'll set them aside and we'll talk about what we do. If you do interchange, what's called interchange plus pricing, you're still going to be 10 to 30% less than Stripe because it's going to fluctuate based on that card, right? One month you could have 75% of your people use their Amex card, right? Because they all want to go on vacation over Christmas or whatever. The next month you could have them all use Visa debit cards, right? Just a lower cost. So your pricing will fluctuate in the month. I have clients that pay under 2%. because they have majority of debit card payers. And I have clients that pay up to 2.7, 2.9%. Never past Stripe, but still fluctuate in the month. And then there's dual pricing, which is where you give your customer an option to pay two different ways: credit card or basically bank debit, right? ACH, e-check, whatever you want to call it. So it's a bank account payment.
Right.
When you do that, when you have a strategy that says, I'm going to give my customers an option on how they want to pay, they pay with a credit card, it's a little bit more. If they pay with ACH, it's a little bit less. Then what we've seen is a 50 to 90% reduction in costs, like across the board.
Okay.
The majority of our clients are saving roughly $1,000 a month because they switched to dual pricing. So
Yeah.
when you think about pricing, those are the things you have to think about. See, like everybody's like, man, I really could go to sleep thinking about that.
Yeah. So, for those that you know aren't like analytical, like probably you and I, and and I think about math all the time for some reason. I don't know why. Um, so the dual pricing model essentially, does that allow them to the business? Does that allow the agency to pass those fees on to the consumer instead of them eating them themselves?
Yeah, that's essentially what's happening. You're saying, hey, as a business, my credit card cost for this product is X. My cash price for that product is Y. That's what you're saying.
Right.
The how it's done, so the strategy of it is actually the most critical point to make. So in payments, I mean, it's really semantics. So people, I'm sure, have seen wherever they're at, it's really gaining in popularity in restaurants. You have a credit card price and a cash price. That is called cash discounting. It is different than dual pricing. So typically in a cash discount situation, when they're passing on the cost, they just have one price listed and then a little disclaimer: if you pay us in cash, we'll give you a discount. Like,
Right.
there's this really great sushi restaurant I used to go to down in California when I traveled there for business. And they had a big sign on their window: if you pay us in cash, we'll give you a discount.
Yeah.
And so we always made sure to take cash with us when we went there. That is different than dual pricing. You are passing on the cost in that way, in that regard, but differently than the way we do it. Again, it sounds semantics. The other way to do it is a surcharge, which is literally surprise on payment, right? Oh, you're paying with a card. Oh, it's going to be a little bit more, right? That's a surcharge.
Right.
That's essentially your ticket master, right? They're calling it a convenience fee, but they're really surcharging you for lots of things. Not legal in all 50 states, and it usually pisses people off
Right.
because they see one
customers, right.
price and then end up having to pay another, right?
Right.
Now the way that we do it, dual pricing, the law wants businesses, if they're going to do this, to do it this way because there are two prices displayed for the product. So then the consumer immediately knows, oh, if I pay by credit card, here's the cost. If I pay by check, here's the cost. There's no line item on the credit card side that says, by the way, we're sticking you with another cost. It does, it's just the cost, right? So it's just a product, just the cost, just check out.
Okay.
And what we see across the board for the entirety of the time that we've been doing this is 98% of people will still pay with a card because they want their rewards miles, right? They want their cash back. We're just creatures of habit, all of us. We all do it. So
yeah. Now I know years ago, you used to not be able to pass on fees, and that changed. I don't remember when. Maybe
2010.
2010. Oh wow, even longer than I thought. Yeah. So yeah, I remember back in the day you couldn't pass those fees on, but the law changed to where you now can pass those fees on without have to worry about getting in trouble and so forth. So so in this dual pricing model, right? So somebody has the ability to pay with ACH, somebody has the ability to pay with debit, credit, and so forth, and then those fees get passed on to them. Now, is the fee different for them if they're using like an Amex versus a debit card?
No, same exact fee. It's the same exact cost for everyone, whatever they're paying with. Yeah, so it remains consistent, which is nice. So, you know, in payments, if you're on the Interchange Plus plan, you could see a wild variation in cost. If you go from 1.9 to 2.5 in the month because people paid you differently that month, that's a pretty big jump. That's a, 0.6% jump in your overall cost. I mean, it's essentially a tax on your business, right?
Yeah.
So the way we're doing it, it's a flat rate and it's on the singular transaction. So it's just per person. And so we see pretty consistent costs across the board, across all the agencies and other verticals that we serve. I mean, it's really like I've got clients that do almost $500,000 a month and they might get a $300 bill. Whereas somebody that's doing 100K a month might get a $100 bill. It's just kind of how it works.
Okay. Before I forget, Welgie, can you take a second, please, and try to turn on the chat so people can talk in the chat? For some reason, it's disabled. Just log into the admin portion and see if you can turn on the chat feature. Jennifer mentioned earlier that it's disabled. Thank you. Okay, so Josh, I know that when we first spoke, you were able to show me some like examples of like somebody who was processing prior to coming over to Numeric, really processing with Stripe, and then processing with Numeric, like the difference in fees and how much they saved.
Yeah.
Do you have any visual examples of that kind of thing now?
Yeah, of course. Yeah, let me
I'm sure people would love, and we're starting to get a couple of questions in there. So for those that are typing questions, we will answer your questions live in just a few. We're going to go down in the order of first come, first serve. But I wanted people to kind of get a visual of like the differences, because I think it's pretty substantial, if I remember correctly.
So can you see my screen?
Yeah. Yeah.
Okay. So this is a calculator that we put together. It lives on our website, numeric.com/calculator, or sorry, /savings. It always redirects to this calculator dash page, but go to numeric.com/savings. This calculator does a couple of things. Okay. You put in your total monthly sales volume, then you put in what your average sale is going to be, right?
Okay.
This will kick out my monthly costs as compared to all the other providers out there, right? So this even includes like people that use auth.net or NMI straight, right? Stuff like that. So
okay.
I just took a quick look across the last 100 applications that we took in. And this is the average monthly sales volume of the last 100 applications that we took in. I don't have the average, I didn't do the average sale price, but I can tell you over 1,000 different phone calls we've had, it's probably closer to $12.97 is the average monthly price. So you can see what happens. This is if you actually, so this $9.95 is if you're paying Stripe just 2.9%. But I just told you I'm consistently seeing above 3.5% on probably 92 to 93% of the phone calls I'm on. Everybody's above 3.5%.
So this is just the minimum that
this is the minimum you would pay
Stripe. Like the actual number.
Yep. The minimum that you would pay Stripe if you were with these numbers. So you can see this. So the way this breaks down is I just told you a second ago that we see even with a different price point for credit cards, so slightly more, right? And I'll show you a payment form in just a second. Even with a slightly higher cost, we still see a 98% adoption for people paying with a credit card. Wow. And that includes people switching to us who were on Stripe. They weren't passing the cost on. They tell their clients, hey, I got a new way to bill you. It's going to cost you a little bit more. Do you want to switch? They all still stay. So even if it's a new customer or an existing customer, 98% of people will still stick with a credit card because it's just more convenient. They want the convenience and they want the rewards. That's what they want, just human behavior.
Yeah.
So this calculator is actually calculating out 10% of people paying by ACH, so just 90% for credit card. So I tend to be a little bit conservative in my estimates, but the reality is consistently across the board, about $100 a month is what people are paying with me versus somebody else. Depending upon the depending upon the volume that they're doing.
Yeah, I mean that's a substantial number.
No, yeah, like It's super like, I don't know, what could you do with another $900 a month? Most
Yeah.
people know exactly what they could do with it.
Yeah.
So
That would pay for my daughter's living expenses at college. Well, some of it.
yeah, see, I mean that's exactly it, right? Like I would think the same way. I'm like, oh my gosh, that covers car insurance, that covers
Yeah.
health insurance. I mean, it covers a lot of stuff for folks. So it's a significant advantage, and then it just gets better as you go up, right? So if you were to grow to 40,000, watch the 995. I'm at 106, but watch the 995. I went up $1, and that went up almost $200, right? If I go up another 5 grand, I went up another dollar, they went up another $150, right? So it becomes exponential over time, for sure.
That's crazy. Your fees went up what, dollar, and theirs went up what, $200?
Almost, yeah.
That's insane. That is insane. Okay, that's pretty substantial. So with this dual pricing model, you're able to pass the fees on to essentially the client that's making the purchase. So
Mhm.
therefore, more revenue comes back to the business. Obviously, it doesn't get rid of all of the fees, as we can see. I mean, you still are gonna, in a $45,000 month, gonna pay $108.
Right.
Man, I've had some transactions that were $108.
Yeah, I mean, that's the reality, right? So then people go say this to me. They go, well, people go, well, what's the rate, right? Because everybody's been conditioned to ask what the rate is.
Right.
So here's how you find your rate. I'm going to tell everybody right now, if they're using Stripe or anybody else, here's how you find your rate. You take your total monthly costs, okay? Total, divide it by your total sales.
Okay.
So I go 108 divided by 45,000. And my total cost, got to times it by 100, so it makes sense mathematically to folks, is 0.24%, a quarter of a percent.
That's not even a percent. Yeah.
Right.
So
It's a quarter of a percent. I will tell you, I've got clients that actually do 50% ACH. They just push it to their clientele. 50% ACH, and they're still not paying a 0.5% total out the door. So even if you had people swing massively in favor of doing ACH, because that has a cost. So everything is built in here. ACH per transaction, credit card, all of it is built in. I have a monthly minimum cost. All of that is built into the 108. I don't surprise you with anything. There's nothing that's going to pop out on month 3 and go, by the way, you owe an extra 1,000. It doesn't work that way. That is the cost that you will see consistently as you move forward in your business. So even if it swings from 98% to 50% credit card, 50% ACH, I'm telling you, the client I have right now does over 100K a month. Every month he does about 50-ish in credit card, 50-ish in ACH. He still pays under a 0.5% total out the door.
wow, that's a big deal.
So it's significant, right? I mean, it's really, really significant.
I mean, let's say your average is on Stripe 4%,
Yep.
and you're doing 100 grand a month. You have a $4,000
Yeah.
bill going out the door every single month. That's employees. That's
48,000 a year, right?
Yeah, that's a lot, right? So that's a big deal. I know that. So when we had our gyms, one of the reasons that we would try to incentivize um, um, our members to switch to ACH was not only were the fees lower, substantially lower. Um, I think our total fee was like maybe 25 cents, regardless of how big the transaction was. But it also helped negate chargebacks. Like they couldn't charge that back later. Is it similar with Numeric, or is it different?
So chargebacks for in-person transactions are more difficult. I mean, you have somebody that walked in and gave you their card and paid for something. It's just more challenging. Digitally, it's much easier because it's harder to prove that a digital product was delivered. Now, when people talk about chargebacks, what they don't know is the only way to really prevent a chargeback is to just give a refund. If you've given a refund, then the credit card company that let that person spend money on that card goes, no, you don't get to charge back. You got a refund. That's the only way to prevent it. So when people talk about how do I deal with chargebacks, how do I prevent them, this, that, and the other thing, the reality is, and if anybody tells you different, they're selling something. You as a card holder, right? You as an Amex holder, a Visa card holder, you have a relationship with the company that gave you that card. It is your relationship and your relationship alone. The card brand will automatically side with their card holder because they want to maintain a good relationship and they want you to keep paying the bill, right?
Right.
So when a chargeback does come in, if you didn't refund, if you weren't given the opportunity to refund, that's one thing, right? But there are softwares and so forth that can sniff them out and auto refund. We'll talk about that later. But if somebody filed a chargeback against you, there's nothing that you can do to prevent it as the merchant if you don't know about it. If you don't have a software that auto refunds, if you don't know the client's going to do it, then the card brand automatically just files it. Okay. So then it becomes, how do you mitigate it? So it is different from what you were dealing with in the gyms than what people are dealing with now, because it's just harder to prove if I delivered a digital product, even if they've logged in, even if you have audit logs, even if you have them on a Zoom call and they said, I agree to pay you this money. It's just different.
Okay.
And so the industry hasn't quite, the credit card industry hasn't quite caught up with what they call friendly fraud. And then outright fraud, that's in some cases highly preventable. But the reality is we live in a digital world. It's harder to prove delivery of things. And so when it comes to chargebacks, it's a little bit trickier. I can give you some pointers and the best way to deal with it, but it's just different. It's the best way to say
I
it.
appreciate that. That clarifies a lot actually. And we're gonna get to some questions here, but I have one question for some of the people on the call. So you mentioned earlier that you got a certain amount of applications, and that's super important. I want to mention because with payment processors like Stripe and PayPal, there's really no application. It's just fill in some information and you have an account, and until you don't, right?
Right.
So at some point you might not have an account and you have no reason why and so forth. So what's the application process look like for somebody who wants to apply for Numeric? Like what kind of things could they expect that would affect the outcome of their application?
Yeah, so the application itself with me, most people can get through it in 10 or 15 minutes. It's not difficult. It's mostly just business information, who you are as the principal of the business. Like, just tell us who you are, where you live, how to get a hold of you. Then what is your business name? Is it an LLC? Just stuff that you would know the answer to.
Sure.
And then the products that you sell, how you sell them, when you sell them, and how much of it you sell. So that kind of stuff. The application really, like 15 minutes max. If you're an organized business owner, 15 minutes max. If you're a disorganized business owner, maybe 30 minutes. It's just not very long. The amount of time though that it takes to get it approved comes down to just that bank giving the approval. So we have 4 different providers, which constitute roughly 15-ish banks. And so we know where to submit based upon the business type and how much volume they're doing and how we want and where they bank. Like there's all these variables that we take into account. It's taking 3 to 5 business days to get an account approved once it's submitted in an underwriting.
Okay.
It's just a process, right? Sometimes I see it in 24 hours. Sometimes it takes 2 weeks because the merchant that submitted the application goes AWOL and we don't hear from them.
Right.
Which happens in business, right? People get busy. The doorbell rings, the Amazon guy comes. So it's not difficult. It's just a time frame thing. I will say Stripe is asking for that information. They just ask for it differently. So if you actually go look into Stripe and look at all the information that they're asking for very similar information. They just ask for it on like 5 or 6 different pages.
Yeah.
And then because they want to do their due diligence. It's not like they want to kick people off. They would prefer to process as much volume as possible. Why not? Right. So it just comes down to what I said before with them and risk. And that's what banks are doing with the application on this side.
Okay.
So I think the other part of your question, sorry to cut you off, was what can people do? Like, what are the sort of qualifications, if you will? Um, so there are things like credit scores, there are things like bank statements. Credit score, the bank's just going to pull. Some banks pull a hard credit score, some banks pull a soft credit score. Just depends. Bank statements, you have to submit those. You have to submit if you're already selling something, right? Something through Stripe, PayPal, Auth.net. They want to see those processing statements because the bank statements will show that you're processing. And that's just to see the health of the account. It's like checking your cholesterol, I guess is a good way to say it. But yeah, they're just trying to see the health of the account because, I mean, some people do have chargeback challenges, and that's a real issue. You know, I will tell you on my side, I had a client eventually lose his account for chargebacks. Just one, and all the time I've been doing this, I've just had one person lose an account. He got to 34% chargeback rate. It was
Wow,
pretty.
that's pretty high. That's very high.
So, you know, when Stripe will boot you for 1%, he managed to hold on for a long time, 10, 15, 20%. And finally the bank's like, we've had enough. You reached 34%.
Yeah.
So anyways, that's the application process. So credit score, you want to be above 600. It's just a good place to be in general. Bank accounts, you want to have a positive balance, right? You need to show some type of capital liquidity, right? The majority of businesses in the US on average have 27 days worth of cash. It's not a really good spot to be in, right? High tech businesses like us have 6 more days, 33 total days. So if you can show cash in an account, it's better for you. If you can show cash in an account over 90 days, even better. All these things just contribute to getting approved faster with higher volumes, right? So you can grow your business over time. Do people with new businesses and only $1,000 in their bank account get approved? Yes, it happens all the time. Their new business is new business. It's just how it works, right? So you have to consider what your cost is to run your business, and then whether or not I'm the right solution for that comes down to math. What's on your screen, $108 includes my minimum $80 a month cost. So whether you process a nickel or $10 billion, I'm at least $80 a month. Stripe doesn't have a cost in the beginning. And so oftentimes I'll get on a phone call with somebody and say, look, if you're only doing a couple $1,000s a month, really you want to get to 10 before I make a ton of sense. Because 10 is where Stripe will really start paying attention to you. But below 10 is where you're getting your feet underneath you, right? You're getting cash flow coming through the door. Absorb that no monthly cost, but per month cost, if that makes sense, with Stripe to get to 10. And then because I can import all your Stripe customers anyway, and you don't have to recollect cards, it's a really good runway for somebody once they find me. Does that make sense?
Okay. Yeah, makes perfect sense. It just dawned on me as you were talking, and you reference it. Like, if you look at like the yearly cost for yours and compare it to the monthly cost for Stripe, it's
Oh
still
yeah.
lower. Yeah,
Yeah, it's still lower.
that's crazy.
No, like it doesn't trigger in people's brains. I'll be honest with you. Like when I show people this, they're like, that doesn't, because it's just not normal for us, right?
Yeah,
We're like, I
yeah.
don't know, that doesn't, I can see it on their faces when I'm talking to them. They're like, I don't know. And then when I actually, when they do it, it's like, I can't believe I never thought of doing this before, right? It's the
Right.
light bulb truly goes on. I know it's cliche to say that, but if you've never done something before, how could you know? You're just trusting people that are giving you information and you make the decision for yourself. But
Yeah.
it really is staggering. Like you can't freaking believe it. It's just nuts.
Okay, so I appreciate all that, Josh. Thank you very much. So let's get to some questions. So there's several in the Q&A center. First one, let's start with Jennifer. Jennifer wants to know, do you have a minimum financial requirement or credit score requirement to sign up?
Yeah, so we talked about that just briefly. Credit score, you should be 600 or above. If you're not, it's possible to get a cosigner. So let me talk about that really quickly. When you get approved for a merchant account, whether it's through Stripe just automatically giving you one or one of my banks giving you one, ultimately what's happening is that bank is saying to you, we're letting somebody else take a loan to pay you, right? There's risk involved with that. And so if there's risk involved with that, the underwriting comes in and says, well, you're risk worthy because you're running a business. So credit's important, right? And then, like I said, minimum financial requirements. If you're doing 5,000 a month or below, I'm probably not the best solution for you. Just straight up. I would rather have you keep that $80 a month and grow your business to 10 and then come back and we can switch everybody over. It's totally seamless for you, including existing customers. So those are the main ones that I talk about. But
Okay.
yeah, like it really doesn't make a lot of sense unless you're doing 10K a month with me.
So that actually just sparked another question for me. So we're talking about agencies of GHL. What about their clients? Do they have the ability to accept numeric?
100%. Yeah, we actually built numeric to first solve the challenge for agencies who are dealing with Stripe issues, and then second offer it to their clients. So you can see on the screen I've got an affiliates link. So think of it this way: your product is already pretty sticky when you offer a SaaS. If you offer a SaaS, right? SaaS,
Right.
Sean and those guys talk about SaaS churn rates like 5% or less. Add payments and you're down to like 1 or 2% churn rate. So just
Good
think
point.
bundle and save, right? So when you offer, what we find is agencies absolutely can offer us. You can become an affiliate. You can actually earn money on every one of your client sales because every one of their sales contributes to total volume.
Wow.
So over time, as you help your customers grow, which you do as an agency, right? Then the more money they make, then the more revenue that you generate. We also find that oftentimes what we're saving people in a month is paying what the agency charges their client. So then the agency essentially becomes free,
Sure.
right? By a simple change. The business already has to take payments. It's not like they're not taking money in the door, right?
Right. They
So
get
if
it
you're
somewhere.
if you're an agency serving a roofing company, an HVAC, whoever you're serving, they're already taking payment in the door. Why not attach it to your software platform that you're offering them and make it all one smooth product and
Yeah.
make more money in the process?
Yeah. That's a very good point. So essentially, they're earning money twice and making their product more sticky by offering it to their clients as well. So for those that aren't familiar with what sticky means, it just essentially creates a need for them to stick with your agency longer. It makes it harder. Like your cell phone is a sticky product, right? Most people don't want to switch cell phone companies because of the hassle like they have to go through, right? That becomes very sticky. So the stickier you make your agency, the more likelihood they're going to stay with you longer. I appreciate that, Josh. So the next question comes from EE. EE wants to know, can I rebuild clients in GHL like email, WhatsApp, SMS, etc. through Numeric?
So you can rebill SMS and email right now. We don't have the ability to rebill for WhatsApp yet in terms of usage. I mean,
Okay.
technically you can rebill them if you just charged them every month, but yeah, you can rebill in our software. So this is our platform,
Okay.
right? So you can create multiple rebilling products, whatever price point you want to do. We don't have a limitation on 1x or 10x. You can charge whatever you want. But yes, you can rebill for SMS and email right now. The
Okay.
limitation on the other products, WhatsApp, WordPress, that kind of stuff, is a GHL limitation. They just don't offer up that API endpoint yet to
Right.
count that usage.
So for those that are on the webinar now, put a one in the chat if you are a SaaS company. You're rebilling your rebillables to your clients. Jennifer, that's fantastic. So basically, if I'm understanding this correctly, Josh, if somebody is rebilling phone calls and emails and SMS, they can do it through Numeric. It's just they can't rebuild WhatsApp itself. What about like workflows and things like that? Is that on the horizon as well?
It'll be on the horizon as soon as GHL releases the API endpoint. So basically, right, for those who don't get into coding and APIs, HighLevel gives you API endpoints for certain things in the system.
Yeah.
Right now, there's an endpoint that exists for a location for us to count the amount of emails and text messages that are going into and out of the account. They
Okay.
do not give you an endpoint to count WhatsApp, Yext. That just doesn't exist in their technology yet.
And
So
is that rebilling automated, like
yeah,
the way it is now with Stripe, and
yeah.
so forth? Okay, so they don't have to remember to bill them and so forth. Okay,
Yeah, totally automated. So basically, we can bill on basically a wallet, right? So that's exactly what GHL does. So auto recharge $20 if the balance is lower than 10. We
okay,
built an additional way to do it, which is on a throttle, meaning if they send out 100 messages, we'll bill the card on file. If they send out 100 texts, we'll bill the card on file, and then it just resets itself in a similar way.
I see, I see. Okay. And it looks like from your screen share that they can also set the rate for that.
Yeah, you can absolutely set the rate, right? So this is just sent. So I think email's even less. I think it's actually one
Yeah,
more. But this
yeah.
is basically what HighLevel is charging. I actually think it's 0.0079. So that's a straight pass through. If you wanted to essentially double it, right, you would just do 1.5, right?
Hmm.
So 1.5 cents.
Yeah.
That's
Okay.
how that works. Yeah, you can set it at whatever you want to set it at.
Okay.
Yep.
I appreciate that. Next question says, I think actually that's the same one. Let's see, you mentioned, Bill, are you billing your customers monthly or taking fees at the time of the trial? Okay, yeah, so, all right, so this one is a good one. I think you mentioned this early on in the conversation. Are you billing your customers monthly or taking your fees at the time of the transaction?
So dual pricing works where we bill once a month.
Mhm.
Let me illustrate
You
how
bill, you bill the
pricing.
agency once a month, right?
The agency gets billed by us as the basically software provider to do all this, right? So
Yeah.
Numeric is our software. We built this from the ground up. We built it to solve for Stripe and HighLevel. This is us. The banks, we don't own or control those, right? We partner with them to get the merchant accounts, and then we configure the whole system to work inside of HighLevel as a payment solution. So merchants get billed twice, always on the first of the month, once by the merchant bank, once by us. That's how it works. And so the cost that I'm showing you here is basically split up into two bills. This is
Okay.
really how it works. Now, when the bank bills, what's happening in this scenario, right? So let's look at the check price, right? So the check price is $297 even, and the credit card price is $308.43. So that's $11.43 different, right?
Mhm.
So the customer pays this total amount, and that $11.43 goes into an escrow account. And then Visa and MasterCard might come back at the end of the month and go, hey, you owe us 10 of that 11.43. And so
Hmm.
we go, great. We're grateful to keep the 143 as a profit and how we operate payments in our business. And the bank and Visa and MasterCard goes, thanks for the $10. The difference, right, is what we talked about. The customer's choosing to pay that.
Yeah.
And so it doesn't come out. So the billing is once a month to the merchant, but every time a transaction happens, money goes into that escrow account to pay a bill.
Okay. And so the bill basically that comes from that ends up the merchant ends up paying is the difference between what's in the escrow account and what the fees are.
Yeah, let me give you an example of that. So here's some actual let's just use there's like this one. Let's just
Okay.
use this one. So this is an actual statement from a client of mine. It's from last year.
Okay.
Because I just haven't updated. They all look the same.
That's fine.
Um, so so I'm going to show you, illustrate for you. So this bill was the merchant had $54.99 deducted from their account at the end of the month for one part of the bill. This is the merchant bank billing the customer, billing the agency, right? For $45,000 in processing. Okay. This is what was collected total to pay the bill. This is what was paid, and there's your $54 difference.
So the fees paid is what the customers paid to them.
Correct. This is the
That's
total
insane.
fees due. So this is what Visa and MasterCard charged,
Yeah.
right? And then this is what was paid by two different parties to make up the total. Make sense?
Yeah. So basically the customers paid a majority of it, almost 99% of it. Um,
That's right.
and then the merchant paid the difference of $54.99.
Yeah, and I'll tell you this one right here, they paid an extra $25 because they chose not to do their PCI compliance. You
So
knock
they
that,
would have paid $25 less.
yeah, they would have paid $30 total on that 45,000 for this.
That is crazy. That is so crazy. All right, great. That's a great question. Also, so I think it's important. You mentioned it a little bit briefly just a moment ago, but I think it's important for people to understand that when any merchant payment processor, excuse me, when a payment processor is sending you money to your account within 1 day, 2 days, whatever it may be, they're essentially loaning you future money, right? Because
Yeah.
even though the transaction might have gone through yesterday,
Yep.
and then you have the funds in your bank account tomorrow, the bank that processed that transaction doesn't have those funds yet, right? They're still en route or in the process.
So if you do same day deposit, that money is still in transit. Correct. That's absolutely correct.
Yeah.
If you do next day, it's likely that they've settled and they're just waiting for the funds to be deposited. If you do 2 business days, which is our common way of doing things, then yeah, the money's absolutely moved.
Okay.
So it's moved from one bank to the next. But that's a great question to ask because again, a lot of people feel like, and I don't blame anybody, I really don't, but a lot of people feel like, well, Stripe said I can just give you 4 pieces of info and I don't need to tell you anything about my life, and I can charge 10 grand to anybody I want to and give them, a piece of paper back. So we just have to think through how money works. That's it.
Yeah. Yeah.
And money is, I mean, essentially what somebody's doing when they pay you with a credit card is they're taking a loan out to buy your product or service. That's what's happening.
Yeah.
And so, yeah, I mean, money is technically moving, but it's all numbers on a page. It's all
Correct. Yeah.
numbers on a screen. So,
So we have a couple more questions. I'm gonna skip to Simone's real quick, and then we'll go back. Simone wants to know, how do you prove you've delivered a product if you handled the product to the customer, or excuse me, handed the product to the customer in the store? I have a local client getting a lot of fraudulent chargebacks. How does he prevent them?
yeah, the best, I mean, most stores now have cameras. So you've got like, you got camera footage. I'll give you actually a personal example. I have
Mhm.
my Amex card stolen. 2 or 3 years ago, somebody booked the Hilton at LAX. I'm in Utah.
Hi.
And then that same day, like within just a few hours, bought a dinner in San Jose.
Oh wow.
So I filed a chargeback. I told Amex I did not book that hotel room. They said they came back and said, no, the hotel knows you checked in. I was like, show me the camera footage where I checked in. Here's my driver's license and what I look like. I won the chargeback. Like I got my money back, right? Somebody didn't get to steal my card and walk away with it.
Right.
So my point is I asked them for video footage that I was in LA at the time they say that card was used, and I wasn't. So stores can use that. If somebody used a debit card, right, that requires a PIN. That's the route that I would generally take with that kind of stuff. Is hey, I've got video evidence of people buying my products. It is going to be a bit harder to match up the person based upon the camera angle and stuff, right? I'm not a detective, but
Yeah.
in what I do, you're asking a very valid question, and I just try and think through logically how I would prove how somebody took a product. I mean, cameras are everywhere these days.
Simone, I just turned on your ability to chat. I mean, does that answer your question? Or not to chat, to talk, excuse me.
No, it does. Thank you so much.
Yeah,
Yeah,
you're
of
welcome.
course.
Okay, great question. So let's do another one. Let's see. So I think you actually demonstrated this a moment ago. We're going to ask it in case anybody didn't see it, but Jennifer wants to know, does your payment processor have the ability to display the different pricing for dual pricing?
Yep, right here. So we display it based on your choice of how you're going to pay. So this is dual pricing compliant in all 50 states. All of our banks know that we do this, so they all know exactly how we display it. Some people will display it as literally 2 different prices here, and however you choose to pay here then determines what you pay here. We choose to do it this way, and it works perfectly fine.
Perfect. So it just, is there a way to change how it displays, or does it always show up side by side like that, where they can choose checking and debit credit?
It always displays this way. Yeah. You can default to one or the other. You can change
Okay.
that. But it always shows just like this.
So you had mentioned earlier that you feel like most people choose debit or credit because of the convenience and points. Do you think it has anything to do with, like today's society? Like a lot of people don't even really know what their checking account number is. Like if somebody asked me that, I'd have to go look it up.
Yeah, that's for sure part of it, right? Most of the time this pops up for you, right?
Uh-huh.
So that's the convenience that I'm talking about. Chrome, right? The browser I'm on, it's like, I don't know what the usage is. It's above 70%, I believe, globally.
Right.
So all these features work in your favor. What we're doing is we're tapping into human behavior. And human behavior pays with a credit card so much. Like the data on it, every couple of years, the Federal Reserve Bank will do a study on spending trends, how people use money.
Yeah.
And every year, how people spend money changes a little bit upwards for credit cards, debit cards. It's just,
Okay.
again, it's a convenience thing. And so digitally, this becomes the ultimate convenient thing. Look how many freaking cards I have on there. Like, I don't even bother to take off the ones that were gift cards, take off the ones that have
Yeah.
expired. I just don't bother.
Yeah.
And so yes, nobody really knows their bank account or routing number, but also if you look at just generally in the US, the majority of people, I don't know the actual percentage, don't even have like real savings. Like most people don't even have $1,000 in their bank account. So they're constantly floating card payments to get what they want in life. Now, in business, most of us are doing business to business transactions, right? As an agency, you're selling to another business, helping them market and grow their business. And that's typically always run on card anyways. There's just a bigger benefit to it. Like Capital One has a whole series of commercials on how some dude paid for his health insurance for all of his employees from his cashback. So it's just ingrained in us. It's just
Yeah.
ingrained in us.
Yeah. Yeah, that's great. Does that answer your question, Jennifer?
Yes, it did. Thank you.
Yeah, you're very welcome. Okay, so also I got a question from someone offline. So payments like what is it called? Klarna Afterpay and things like that. Is that a possibility with Numeric?
We don't currently have anybody integrated for what they affectionately call BNPL, buy now, pay later.
Okay.
Yeah, we don't have any any platform currently integrated.
Okay.
Yeah.
And I mean, does anybody else have any additional questions that they want to put in the Q&A? Go ahead and type them in now. But I mean, this has been fantastic, Josh. I appreciate
good, I'm glad.
sharing all this. I'm sure there's a lot of people out there that have questions about like what's the future of people being able to process with Stripe and looking for alternatives. I probably get somebody asking me an alternative question every single day, at least once. So having somebody that they can go to be able to offer those things, I think is going to be a big deal for them. So is there anything else you want to add?
The one thing that I would add for anybody, and again, I said this in the start of the conversation, I'm not a fear monger, but I do mitigate risk in my life as best as I can. And the reality is the statistics are against most people when they start business, right? 85 or whatever the number is of most businesses fail in the first 5 years.
Mhm.
The number one reason 82% of those failures are just because of cash flow problems, right? Cash is king. If you've got cash in your business, you can withstand a lot of stuff. If you don't have cash in your business, then you're in real trouble. And so when we looked at the last 100 applications, it just, even in our own world, right? So I've got I've got data from like JP Morgan Chase as recent as last October. Over 600,000 businesses in the US, and there's something like 30 million. The sample size said that most businesses have 27 days worth of cash. Well, what happens when cash is cut off? What happens if Stripe says, hey, you're no longer allowed to take payments here? If you're already in a cash crunch, not being able to take cash makes it ultimately worse. I would never do this, but if I could take the screenshot of every face of every person I've talked to and the stress, they're like, I just got cut off. I don't know what I'm going to do. And I go, we're going to help. Okay.
Yeah.
But it's going to take us a few days to get you approved. They're still stressed out of their mind. So why risk it? Why risk if you know that the parameters are, if I can get up to 10K and then I can make a switch, then my first goal is to get to 10K, right? Now, can you switch if you're off of Stripe? Can you switch to me? I'll 100% help you. It's just in my nature. If you go to Stripe and you get up to 3, 4, 5K and Stripe goes, hey, we're not letting you do it anymore, and you come to me, we'll absolutely help. Okay, absolutely. It's just how we're built.
So,
but think about long term where you want to be with cash flow in your business and how critical that is to making sure you stay alive.
yeah.
It's really what it comes down to.
So, one of the things that kind of came to mind, because we've been processing payments for many, many years, online for the last probably, I don't know, since 2013. So, what is it, 11 years? So one of the things that kind of comes to mind is that, let's say you were Stripe and you're not proactive and you end up losing your account. And then you go and you start getting an underwritten account through Numeric, for example. Like, one of the questions that the banks are probably going to want to know is, why did you lose your Stripe account, right? So potentially, but if you get ahead of that, right, then that's a question they can't answer because you still have your Stripe account, right? So does it make sense for them to have dual options in the event that they lose their Stripe account down the road?
100%. Yeah, 100%. Stripe doesn't cost anything to keep, right? So if you haven't lost it and you switch over, there's not really a chance that you're going to lose it anyways. Like,
right.
If you're not processing payments through it, they're not looking at you, right?
Correct.
So I tell people, if you don't have a problem with Stripe and you're looking to switch, right? Maybe you want to save all that money. Maybe you just want to take the risk off the table completely. Then switch over to us, process all your payments through us, and just keep Stripe as a backup. But I will also say, you don't even really need to do that. I can keep adding merchant accounts to your business in my technology without you making any changes. So imagine Stripe didn't kick you off, but you came to me and you said, look, I need to process with you. I want to save the money. Go, great. We set up your system. You get a payment form like this. You sell a product. Okay. It doesn't matter what product you sell. If you start growing, which we hope that you will and work towards with you, then you're going to need more volume over time. We're going to grow with the current bank, but if I add another merchant account, not only do I increase your capacity to process more, sell more, but I've also increased your stability. And by that, I mean, if you had 2 merchant accounts, and let's say you sold $50,000 worth of stuff, and I got you 2, 50 on one, 50 on the other. Now you can sell 100,000 worth of stuff. I can route that traffic in a very specific way, so you keep volume lower per account, which makes it look healthier, if you will. But also, if you were to run into chargebacks on one of those accounts, let's say you had a bad week on delivery, your team all got sick, whatever happened, and you got a whole bunch of chargebacks, then I can then reroute all of the traffic through the account that doesn't have any chargebacks while you clean up the one that does.
Yeah.
Or we move to the next merchant account and put a third. Right? So think of a highway, it can handle plenty of traffic, but the more lanes you add, the more traffic it can handle, right?
Yeah.
Unless
that's a very good point. That's a very, very good point. Because I think early on you had mentioned that when you're using processors like Stripe and PayPal, you're essentially using their account. And
you are using their account. It's the same as, like, everybody talks about email and HighLevel and the challenges with delivery and stuff. In the beginning, if you were on, not to their fault, right? So I'm not blaming HighLevel, but in the beginning, if you were using their domain and people were doing black hat crap, it
Yeah.
destroys the domain, right?
Yeah. 100%.
So essentially what happens over time with Stripe is they're okay with digital products and services, coaches, consultants, all that kind of stuff. But you get a couple of bad actors in that space and they always exist,
Yeah.
then that vertical gets destroyed. And so then Stripe goes, it's just not worth the time or the energy to keep fighting this battle when there are other verticals we can work in with lower risk, higher profit. It's just business. That's
Yeah.
all it is, right? Now, to you, it's completely personal because you just lost all your cash coming through the door. You got bills to pay, your family to feed, maybe employees to pay. It's totally different for you as an individual. So that's why I say just take the risk off the board.
Yeah.
You have complete stability on my side. I have in all my time doing this, I've seen 2 or 3 accounts get lost. One from the chargeback example I gave you, one because the bank was like, we're just not supporting your business type anymore. We just went out and got them another merchant account and they're totally fine. And oftentimes you can mitigate all of that. You just have to know how to mitigate it, and that's what
Right.
we do.
Okay, that's great. We have a couple of other questions. Deborah Robertson wants to know, so if you don't do agency, but do regular sales of product and done for you as both single payment and subscription, is this still a workable solution?
Yes. Yep. 100%.
Okay.
Yeah, any like we're at the end of the day, Numeric is a technology company, we're a software company.
Mhm.
So wherever you can, like, you create products in our system, you create the payment form in our system, right? So as
Okay.
long as you can create a product and a payment form that has a merchant account attached to it, then you can take payment for that product. It doesn't need to necessarily be integrated into anything else. I will say you can potentially use this on Wix, ClickFunnels. I mean, pick the platform, because we let you embed payment forms on whatever
I see.
platform you use. Additionally, it's just a payment form link, right?
Right.
So as long as somebody has this and there's a product on it, they can pay you.
Yeah, it's just an embed. Yeah. Does that answer that question right there for you, Deborah?
I believe so. I just wanted to make sure, because then he started talking about, the trouble with coaching and bad apples and black hats and stuff like that. And I was like, well, the business that I support is all about coaching and providing those types of services for marketing and sales for the businesses that she works with.
Uh-huh.
And we have had to, with Stripe, work with the Stripe people to get somebody who tried to do a chargeback on us, and we won and got our money back, but it took a while for that to happen. But I just wanted to make sure that Numeric does this.
We can do coaches, consultants. Yep.
Okay.
We can handle all of that.
All right. Thank
That's
you.
fantastic.
Yeah.
Did you have any additional questions, Deborah?
No, but I did want to make one more comment about the lovely Stripe fees, is that we got caught in a mess with them, that somehow we got some of our charges set up so that they are getting additional charges on top of the 2.9 for US, and I think it's like 4.4 for international, plus the 30 cents fee. And then they started doing an additional 4% or 5% fee after the fact, and then charging taxes on that fee.
Yikes.
Wow, that's crazy.
Yeah.
Come on over. We'll take better care of you.
That's for certain. It's interesting that you mentioned that. You just made me remember, like, early on when we first started with Stripe years ago. We, not knowing any better, sent out an invoice from Stripe rather than through HighLevel, and couldn't figure out why we were paying like almost 10% in fees. And when we contacted Stripe, they were like, "Oh, well, you sent an invoice." And I'm like, "So you're saying I pay 10% on invoices?" Like, "No, only when you don't send it in your software, you send it directly from Stripe." I just was blown away. Like seriously, like what makes the difference, so much more that they're charging so much more to do it directly from it.
That's
I
crazy.
Yeah, that's pretty nuts. I mean, I can tell you gateways do that as well. Like NMI as a gateway charges more for an invoice. There's a monthly fee and then a per transaction fee. So you could pay, whatever somebody wants to charge you for that gateway, you could pay an extra monthly cost for invoicing and then an additional per transaction cost. So if you think about just a transaction for, let's say you build somebody for SaaS right on the screen, right through an invoice on an NMI gateway, if you just bill straight through that, then you would pay the monthly gateway fee, the monthly invoice fee. You would pay the per transaction fee for the credit card gateway, which is going to be 25-30 cents. And then you're going to pay an additional rate per the invoice per transaction. So you could have, 50 cents or more per transaction on just an invoice straight through a gateway. It's just, listen, the payments industry, I love it. I'm tickled pink with what I get up and do every day.
Yeah.
But it is a mind-numbing minutia of the ways that they can charge you, and here's why. In the beginning, I talked about Interchange Plus. Interchange Plus is a race to the bottom. So I know we're in the GHL community, we talk about this, but Russell Brunson from ClickFunnels hammered it home, right? Like incessantly. If you're constantly fighting for the lowest price possible to get a customer, you're just not going to win, right? You don't want to be unless you're Walmart and you're the low price leader, you're the second and rest of the way down the line loser, right? So in Interchange Plus, everybody is literally racing to the bottom. That's just how the industry works. So in an effort to produce more income, they add fees on lots of other different places. When I first got into the business and I was doing that contract CMO work, I got a merchant application and I counted every space on the application where they could add an additional fee. And it was like 374 or something like that. It was a crazy amount of extra fees that could be added to somebody. So not only is dual pricing just better for you, it's so much simpler to understand overall. Like there's one cost, you pay the monthly cost and you pay the per transaction cost. Everybody else covers everything else. That's how it works. So at the end of the day, getting a cheaper bill is nice, but also understanding what you're paying for is so much nicer.
Yeah. 100%. You just made me think of something. That specific invoice that I was talking about was a $5,000 invoice, right? So I mean, you can do the math, and I think I mentioned it was 10%. It was actually probably closer to high 7%, but because of the fact that we sent it through there. But let's just for a moment use the $5,000. Say it's just standard 4% that Stripe charges. Somebody's going to still pay $200. On that $5,000 invoice, right? And versus at Numeric, I think if I'm doing the math correct, it'll be in the neighborhood of about $25, right? So if that math is accurate or even remotely accurate, that's a $175 difference on a one sale transaction. That's the difference between running Facebook ads or not running Facebook ads, or running an ad on Google, or running an ad on YouTube. I mean, just the difference in that collecting that one payment, I could essentially fund my entire marketing campaign every month.
Yeah. Yeah, no. So I just want to make sure the math, you're saying the $25 cost to you total, right?
To the business, right? I ran it at 0.5% roughly.
Yep. That's about accurate. Yeah. So you're right. Like, again, I always am like, well, what's the right message? What can you do with the money? Go to Disneyland with the money. It's for profit in your pocket. But as business owners, we think about that, right? If I can buy more ads, if I can add another person to the team that takes more off my plate and lets me focus on growing the business rather than working in the business, then that puts me ahead in the business, right?
100%.
And people often are like, well, it's this or it's that. Listen, we're all human. Nobody likes to change. But when you do the right change, it becomes so much better for you over time that you then look back and go, I can't believe I waited so long to do that, right?
Yeah. Yeah.
So
that's a good point. All right. So Deborah, is that all the questions you had?
Yes, thank you.
Oh, you're very welcome. All right. So that's all the questions that are in our chat and on the Q&A. So how does somebody get a hold of you?
Call me, text me, Facebook message me, hand signals,
Smoke signal.
balloons, smoke signals.
Like for example, if somebody had more questions about numeric and they're thinking of possibly switching, what's the best way for them to get in touch with you?
Yeah, you can go to the website and book a call, or you can shoot us an email, support@numeric.com.
Okay.
I'll tell you this. So this is our system, okay? You can actually test this whole freaking thing out without any commitment other than your time to try it. You don't need a live merchant account to test it. So let me show you what you can do here. And then this is another way to get a hold of us. So you can go to admin.numeric.com, okay? And you can click sign up and you can create an account. Once you've created an account, you can create products, payment forms. You can host those payment forms on your website. We've got a whole knowledge base. You can run test transactions. If you use HighLevel and you want to try out automations, we got documentation on that. You can try the whole system from top to bottom without spending a nickel. And if it works for you, just know that we can import all your Stripe customers so you have a seamless transition that way. And then we just need to get you a live merchant account. That's it.
That's fantastic. So basically, you make it seamless for them to switch over. You make it, it's even more seamless to lower their fees. They can try the system out, test the system out. It seems like one of those things that's a no-brainer for me.
Yeah, exactly. And once you do create an account, if you're happy with it, you'll see this activate account. You'll go here, you'll fill out the application, and you'll be done. It's really quite simple.
Well, fantastic. So I appreciate you being on the
Of
webinar
course.
today.
Thank you.
Hopefully everybody got their questions answered. Yeah, so if you are trying to get a hold of Numeric, their website is NOOMERIK. And it's not Numeric, it's numeric, or is it, which one am I messing it up?
I don't care what you call me, so long as you call me, right? So numeric. So on your screen, right? I'm just going to highlight the word. This is the phonetic spelling of the word numeric, which is numbers. Your business is about the right numbers.
You put a lot of thought into that. It's fantastic. I love it. All right. Well, I appreciate you, Josh.
Yeah, of course.
Appreciate everybody that stepped on the call and so forth. If nobody else has any additional questions, next week we will do our next webinar also at 10 a.m. Pacific, 1 p.m. Eastern. Keep an eye out, on our website for updates on who next week's guest speaker is going to be. I think everybody will be really excited. Another high-level enthusiast. But I appreciate you, Josh. Thank you very much, man.
Thank you. Great being with everybody.
All right. You have a good day.
Yeah, you too. Bye.
All right. Bye-bye.